Well, March was pretty good too as far as temperature wise, but unfortunately the real estate market is staying red hot, even outpacing the temperatures. So as agents, we find ourselves sometimes wondering, are prices going to get as crazy as beer prices at a ball game? Well, today we're going to dive into the numbers and see exactly where we've headed and came from in the first quarter of 2021, and take a look as delinquencies for mortgage rates have changed courses a little bit. Get you caught up on all those numbers right now. Hi, I'm Jake Tysiak, that guy that sells houses, and today we're getting you caught up on everything to do with the real estate market here in the Chicagoland area. Now, as usual, we're going to touch base in DuPage County as Will County as well, and get you caught up exactly what's happening in March, as well as what's been going on in the first quarter, and to give you some thoughts heading into the next quarter. Now, as I mentioned, delinquencies have changed a little bit. We'll cover that as well and figure out really, are we starting to worry? Is there a bubble ahead? And we'll dive into that shortly. But first, let's start off with talking about home prices. Now, here in the entire MLS, we did see our average sales price raise to $317,500, up 1.2% compared to February. DuPage County and Will County also saw very similar increases as well. Now, also with homes that have sold during that same month, we did see an 18% increase across the entire MLS. So again, a very strong start to our spring market. Now, when we also look at new listings, we did see about the same new listings come on as we did last March. But also keep in mind that last March was sort of when COVID just started and really affected our sales about halfway through the month, where things just went on pause. They are still just a little bit down when we compare it to the past few years prior to that. Now, when we look at our inventory, you can see the homes available for sale actually fell another 10%. And really, when we look at it, we're getting down to low levels with only 1.2 months worth of homes out there across the entire MLS. DuPage County youth hit 1 month worth of sales, and Will County slipped just a little bit from 0.8 to 0.7 this month. Now, when we look at the actual amount of delinquencies, trying to keep up with what's going on with foreclosures, we did see an uptick. Now, this is our first uptick in 8 months, where we went from 5.85% to 6%. Now, with that being said, should we really be worried about foreclosures? I would probably say no, at least here in the Chicagoland market. Now that we're a month in, and there's starting to become an uptick in delinquencies, are we worried about a bubble? I'm not worried about a bubble at this point, for a couple of reasons. For one, yes, we did see an uptick, but we're not seeing a lot of forced sales coming about. There are a few short sales mixed in here and there, but not very much. Not to mention, our inventory is still at record lows. We're at a month worth of supply in DuPage County and less in Will County, and just above that for the entire Chicagoland area. To give you an idea, back in January of 2008, right before the Great Recession, we saw about a 10-month worth supply of homes across the entire Chicagoland area. Now, to give you an idea, traditionally, we range from about 6% as a high down to the mid 4s or low 4s. And that number was going strong for about 6 or 7 years prior to last year, when we saw that number strike down quick because we're just not seeing as many new listings. So prices are still staying strong because there's lots of demand. So I don't see a bubble popping or a bubble existing for all practical matters in the near future, as there is just lots of demand for homes right now. I also do see some relief coming from prices hopefully in the near future. There's a trend starting to see, as when we look at this first quarter this year, we are up 17% compared to last year. While yes, this quarter we are up 17% as a whole compared to last year's same quarter. When we look at our previous quarter, the fourth quarter of 2020, those numbers were up 33% comparatively. So as you can see, we're starting to ease off that number where we're having lots of sold homes above our averages, and hopefully we continue this into the next couple of months. Now again, some of these months from last year were slightly depressed because of the COVID numbers. However, we still can't compare that back to 2018 and 19 and so forth, just to really gauge where we're headed. So again, I'll be back next month to give you more up-to-date numbers on what's happening. In the meantime, if you're looking for 10 homes that have sold in your neighborhood, take a look at the link below for your free report, or give me a call if you have any questions. In the meantime, if you're a home buyer, you're going to want to take a look at our survivor guide here, and also get caught up on all of the home buying process right here. I'm Jake Tysiak with Keller Williams. Thanks for watching. Bye. Last year's first quarter. It's down quite a bit compared to last quarter of 2000. Last year's fourth quarter itself, we saw home sales, COVID cases, and I'm not even going to say that.